Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully, you guys had a very good day in the markets today. And in today's action, well, we got bounce day number 2. Bit of a relief rally underway here. The NASDAQ, very nice green candle on the S&P 500 as well. A bit of a green candle too. Now, we know that the S&P is still in the context of this daily downtrend. And we know that although Monday and Tuesday haven't been that volatile, well, we possibly have some more volatility on the horizon. Number one, we got Jerome Powell coming out tomorrow with a big speech tomorrow afternoon. So there is not going to be any interest rate cuts tomorrow, but a lot of the emphasis is going to be how he answers questions surrounding the status of the economy, the status of the inflation markets, obviously with the pressure on energy right now and transportation costs, and of course, the ongoing effects of a somewhat soft labor market. So expect some volatility tomorrow afternoon. And although today there were no major new war headlines, we are still watching things every single day for new developments, watching the price of the barrel of oil, although today there wasn't major news headlines to report. So in today's video, we'll keep it very simple. Number one, we're going to be going over some other news headlines, which include several tech headlines today that I thought would be interesting for our analysis. After that, we're going to run through our indexes, take a look at the S&P, the Qs, and some of our minor sectors, check on that rotation, and especially check on the rekindling of the market breadth. Market breadth has been significantly improving the past 2 days. We'll see how long it lasts. After that, we'll get into our big tech names down below, and you'll see that it was a pretty mixed bag here on big tech. So once again, derive which of these companies are in good trading locations and or in decent locations to add to our long-term portfolios. And at the end of the video, we'll get into everybody's favorite section, of course, which is the biggest gainers and losers of the day. Many names down 5 to 10% today, some of which you know very well. And conversally, many names that performed really well today. We're going to talk about some trades that are looking very ripe for breakout patterns into the next few days of action. So should be very fun video, guys, and possibly shorter than we've been used to recently. So without further ado, let's get right into it. And if you want to skip to any portion of the video, I'll always remind you the timestamps to all the different parts of the video are down below in the description. Let's get into the action, shall we? So the S&P up about 0.25%, the Qs up 0.5%, but another very decent day of market breadth. Now, you did have some laggards today, such as NVIDIA and Broadcom pulling down, Microsoft not doing that well, Meta as well. So big tech was mixed, but decent pushes here within the semiconductor niche, especially in terms of memory names. We'll talk about those at the end of the video. Software not doing too bad. The banking sector also having a second very nice day. A lot of your private credit companies came up substantially today, KKR, BX, right? Some other ones such as Apollo. And to the downside, well, consumer defensives pulling back even further than they had been in the past few days. And healthcare, although healthcare was mixed, really dragged down here by the impacts of Eli Lilly, down about 6%. We'll talk about that name at the end of the video as well. And the bottom half of the market here, a little bit mixed. Energy stocks continue to outperform, and the rest, whether it's industrials, utilities, or whatnot, a little bit mixed. Still a bit of a stock pickers market within those niches, but a lot of the defense names, guys, have been somewhat pulling off their highs recently, even amidst the ongoing conflict. Onto the one-day relative, you can see that even better. Energy, biggest performer of the day, followed by consumer cyclicals, communication services, financials, industrials, and technology. The only ones that were down today, utilities, bit of a soft day today, defensives, and healthcare. We'll talk about many of these sectors as we move through the video, and especially tackle some names at the end of the video to play those various niches. And on the 1 week relative, well, clearly the damage has been done, right? The S&P much lower than we were last Monday at the current time. So the 1 week relative, guys, only energy and utilities making out of here alive with some positive gains. Everything else to the downside. The worst performer, basic materials, right? A lot of the mining companies, especially gold, silver, they've been somewhat soft recently. Technology in 4th position, still down on a 1 week relative basis, but you have had some outperformance here, especially the software names, right? Software has been holding up better than most, let's say. I wouldn't say it's breaking out as much as it had since the bottom, but holding up better than most. And today we got some action in cybersecurity as well. Some of these cybersecurity names, CrowdStrike and a few others, putting up some very nice gains. So the market still remains very volatile. Obviously, we're going to watch things on a daily basis. I mean, we always do, right? But in the context of war headlines and whatnot, we can't get ahead of ourselves in terms of thinking, and that's what we've been covering over the past week and a half as I bring you guys the statistics on the whole situation. Fear and greed index still in extreme fear territory right now because your market momentum is weak. That's measured by what's the distance of the S&P in relation to its 125-day moving average. At least that's what CNN measures. We are still under, so extreme fear. Stock price strength Not many new net 52-week highs versus the lows right now. You can see that ratio has curled over significantly since the conflict began, and stock price breadth as well remains in extreme fear territory right now as breadth has kind of collapsed. We've been talking about that as a possible contrarian signal and an entry signal into the markets, especially in some individual names. And last but not least, put to call ratio still high. We know many people have been buying protection. We've been talking about this many times on the channel the past week and a half, but this is also possibly a contrarian signal, right? When everybody is flooded to the protection side of the market, and when you know that put to call skew is through the roof right now, well, you're getting some relief bounces in the market, and it's definitely not surprising in terms of the institutional positioning as a result. So that being said, guys, in terms of the news, before we move into some technical analysis here, quite simply, today was a day where we got many tech headlines. So number one here, SK Hynix coming in during the NVIDIA GTC conference and the chairman confirming that the memory shortage will run until 2030. Wafer supply trails demand by 30% because new capacity takes 4 to 5 years to come online. There is no shortcut. Very solid numbers right there. And you can see the growth of memory capacity here on this chart across the various NVIDIA different product releases, right? So anywhere from the H100s all the way through to the Rubin platform, of course. So more and more memory requirements from these companies, which is why we've seen some very substantial breakouts here on Micron, which has earnings tomorrow, by the way, coming beautifully off of the lows, and even names like SanDisk as well, WDC participating well to the upside. The only ones that haven't really been joining the party yet are the Korean names. And now I use EWI as a proxy because Samsung and SK Hynix represent like 46% of this entire ETF, but these ones still a little bit muted. So possibly a very nice follow-up trade. I found this to be extremely interesting. You can see the Korean major year-to-date returns just have not been the same as they were, where they were kind of blasting off January through February. A little bit of natural consolidation, but we know that Micron and SanDisk also went through similar periods of consolidation before breaking out. So EWI, possibly a very interesting sympathy trade, a nice follow-up trade of sorts, right? Moving on further here, some more comments from NVIDIA CEO Jensen Huang saying the revenue opportunity for Blackwell and Vera Rubin, which is a combination of CPUs and GPUs, Vera Rubin that is likely to be larger than $1 trillion by the end of 2027. We reported this headline yesterday, but Jensen providing a bit more clarity today. The current $1 trillion figure only reflects backlogs for those two platforms, Blackwell and Vera Rubin alone, and excludes NVIDIA's other GPUs, CPUs, storage, and other products. So it's likely going to be a lot more. Well, not substantially more, but a decent amount more here than $1 trillion. So a little bit more on that news headline from yesterday. Moving on further here, more NVIDIA news. NVIDIA planning to return 50% of free cash flow to shareholders through dividends and buybacks on a future ongoing basis. And that's quite substantial here, guys, because NVIDIA does generate a lot of free cash flow. Now, they do have a ton of shares outstanding. And of course, their valuation is quite high in terms of the amount of shares that they would have to buy back to actually make a dent here. But you can tell, right? Every single quarter, at least the last 2 quarters, $20 billion in free cash flow, giving them on a future forward basis, right? A $100 billion free cash flow run rate. So returning half of that to shareholders is definitely something that is going to help the share price in the long term. More news headlines from NVIDIA. This time we have received purchase orders from China, and we're in the process of restarting our manufacturing. It's different than it was 2 or 3 weeks ago, and our supply chain is getting fired up. So all of you will likely start to hear about that. I will remind you, currently, as part of NVIDIA's guidance, there is no revenues from China whatsoever in the guidance. So this as well is going to help the stock, and all very beautiful things that Jensen Huang has been saying recently, but the stock price has seen no gain. So still in an accumulation phase, and I still believe it is a great time to be picking up some NVIDIA if you enjoy this company and you also believe in the medium-term and long-term thesis of the business. Moving on a little bit further here, some news out of Amazon. Amazon CEO Andy Jassy said in an internal meeting that AI could double AWS sales to $600 billion by 2036, up from a previous internal estimate of $300 billion. This is absolutely massive news. Not only is Amazon firing on all cylinders of their business, but now more and more gains across the AWS segment. They are already the largest cloud provider on the planet. So to see such a staggering guidance increase here from Andy Jassy, obviously not in 1 year, but over the next 10 years, that is quite significant, guys. To increase that amount, a 2x of sorts, Very interesting from Amazon right there. Super bullish on this company, as you guys know. More news out of Amazon. Amazon rolling out 1-hour deliveries in hundreds of US cities and 3-hour deliveries in 2,000 cities and towns. You guys in the US are super lucky, man. I wish I could get Amazon 1-hour deliveries. We can get same-day deliveries here in Canada, but 1-hour deliveries and 3-hour deliveries, that's pretty crazy. Now, obviously, a lot of that is going to be for their grocery business, but still, substantial improvements from Amazon right here. And you can thank a big portion of that to their robotics business, right? Moving on further here, OpenAI signing an Amazon AWS deal in a bid to win government contracts. So OpenAI jumping at all these government contracts that Anthropic has been losing all across the board. You know, there was some drama about a week ago at this point between Anthropic CEO Dario and the Trump administration, because the Trump administration wanted to use Claude and Anthropic for battle purposes, right? And wanted to have full reign of the platform. Anthropic said no, and as a result, well, OpenAI coming in now and for government contracts, signing big AWS deals in the process. We had some news about a large contract here that OpenAI was willing to use Amazon's cloud services as well. This was about 4 weeks old, maybe at this point in time. So interesting further developments. Moving on a little bit further down the line here. This is your Morgan Stanley research in terms of your robot total addressable market estimates. Look at the massive scale ramp. And we're all the way down here, guys, in 2026, right? This goes all the way out to 2050. So expect me to be talking a lot more about robotics, everything from, well, we'll just move down the slides here. Home robotics, small drones, humanoids, autonomous vehicles, industrial robots, professional service robots, and large VTOLs. So recently, we've been talking a lot about the small drone plays. Home robotics, in my opinion, not quite ready yet, still a few years away, as are humanoid robots. Autonomous vehicles, we talk about it every single day almost. Industrial robots, we haven't focused a lot about that. One of the main companies that people focuses on is Symbotic, but we should be paying close attention here to the robotics ramp, right? And I'll bring you guys as many plays as humanly possible into the next few quarters, and we get more and more information on more and more players in the space. It's just there's not very clear winners in the space right now. The space is still very much fragmented. Moving on further here, Oklo coming out and signing a Department of Energy agreement to design, build, and operate its first Aurora reactor at the Idaho National Lab. The project now moves into the next phase under Department of Energy oversight, using an accelerated pathway to deploy advanced nuclear capacity before pursuing full NRC licensing. The only company that has full NRC licensing right now is SMR. And unfortunately, this stock has just collapsed off a cliff. So maybe a lot of you guys have forgotten about SMR and Oklo because we haven't talked about them for a while, because let's be honest, their stock price has absolutely collapsed since the October highs. But the nuclear trade is very popular and still has amazing upside. And we'll be talking about at the end of the video, guys. NUKZ, just a broad market ETF, or URA, very good picks, but we'll go over some individual picks at the end of the video as well. Moving on further down the list here, the last one that I got for you guys today, United Airlines, saying it's facing about a $400 million fuel headwind this quarter, but the revenue backdrop remains strong. United said 10 of the biggest booking weeks in company history came in the first 10 weeks of this year, with the March data tracking around plus 14% and Q2 expecting to grow at a double-digit rate. This is very important, guys, because even though, right, the fuel prices, jet fuel prices here in Europe have surged on the Iran disruption, and United Airlines saying, yeah, we're going to have to pay a lot more, the underlying theme here is very clear. Travel over goods has been a bit of a secular trend over the past 2-3 years, and we do expect that to continue. I say it every single quarter almost. So although some people may be playing the airlines for a snapback recovery, a lot of people have been talking recently about the Jets ETF trying to go for a snapback recovery from the Iran situation. Obviously, they've gone kind of decimated here as a group, whether it's United Airlines, whether it's Delta Airlines, whether it's American Airlines. Some are doing better than others, but by large and by far, airlines have been down. Other companies, not because of the Iran conflict, have come down because of the software narrative. And you guys know me, Booking.com is one of my favorite pickups for travel and entertainment because of the secular trends that are going on right now. It's not for nothing that United Airlines is saying that, listen, we're getting some of the strongest bookings ever in company history, right? Travel remains extremely strong, although the price of airline tickets now will be moving higher. The secular trend, if we're looking to invest into travel for the next few years, Booking.com, probably one of my favorite plays right now. They're just the middleman, right? Hotels, flights, experiences, etc. Trading around a 16 forward price to earnings and under a 1 peg at a 6.5% free cash flow. very decent look if you guys are interested in the travel plays rather than maybe playing the airlines, the cruise ships, or things of that nature. And that is pretty much all the news that I had for you guys today. So keeping it short and sweet on the news headlines so that now we can spend a lot of time moving into these charts and get to the end of the video to talk about the biggest gainers and losers of the day, because there's many hot plays today. So let's get into the technicals, shall we? So moving on into the good old S&P 500, guys. Well, not much has changed, and we know we got a big volatility event tomorrow with Jerome Powell. One thing that is very clear, though, is that we remain in this daily downtrend, still rejecting a little bit from our resistance range right here, trying to pull back into it. You can see it even better on the futures market, right? Just trying to clip into the price action, but unfortunately, we keep getting rejected, right? Every time we get a nice start to the morning, over the past 2 days at least, we kind of taper off here into the end of the afternoon. So, although the bears are still in control, the line in the sand remains 661. You don't want to see them breach that. If they do, we're coming right back here to the 200-day EMA, 660 down to 654. It's going to be a very volatile market, so make sure if you're trading, guys, especially trading volatility, right? My favorite way of trading the markets right now, as I've been saying, selling put options on big red days with increases in the volatility allows us to sell put options far below the market prices. And then when we get nice bounce recovery rallies like this, perfect time to take the trades off the table, recapture the buying power, and wait for more, at least until we are through this conflict. As you guys know, right? There's two criteria now for conflict resolution. We talked about it yesterday. Until you have ships that are going through the Strait of Hormuz or a ceasefire, well, a lot of the catalysts here that have happened recently, such as the SPR releases, the pipelines, the calls for G7 members to help secure the strait, the insurance provided by Chubb right now, the military superiority, the number of missiles and drones from Iran down 95% from the start of the conflict, and Iran letting non-US allied vessels through. Until these things clear up, guys, it's still going to be a very volatile and headline-driven market. So please keep that in mind. Don't get ahead of yourselves. If you want the bulls to retain, or rather come back into full control, you gotta give me the daily uptrend. Until that time, we still remain in weekly consolidation, and at the same time, monthly consolidation too. Would be very interesting if we're able to tag that 12 EMA, which conversely is the 200 daily EMA. On to the QQQs right now. The Qs still locked in terms of price action, right? So trendless right now, just in a very choppy yet somewhat tight range. Overhead resistance 613 to 606. If you really want to see some relief, you got to break above. Then the bulls become back in full control. If not, just going to get stuck in this range. Below support, they've been respecting it. 596 down to about 590 is that range. And right below it is the 200 weekly EMA. Same thing here, right? We are in the context of a slight weekly downtrend and monthly consolidation as well. So please keep that in mind, right? It just means that in terms of shorter term trend trades, if you guys are looking to play direction, it's kind of directionless right now, unless you're playing some of the very hot sectors and being very patient. We'll talk about those at the end of the video, but by large and by far, large cap, especially large cap growth, hasn't really been doing much, let's be honest. Well, let alone in the past 6 months, but especially in the past 2-3 weeks. Moving on to financials right now. Financials actually started off the day with a beautiful bounce. The sector was up almost 1.5% before closing, unfortunately, near the end of the day. Now, they were still up about 0.5% on the day, but suffice to say, the bears remain in full control of this chart as well. Daily downtrend, it's been a very nice bounce attempt. We'll see. Can the bulls change this one around for a daily uptrend and attack the resistance range 51.5 up to 50? Or do we have to come a little bit lower and once again come into daily oversold conditions down here? Sorry, my head's in the way. That would be a retest down here of support 48.30 down about 46.90. I think that's a beautiful location for financials. Nice price action area of support, and the 26 EMA consequentially, right? That being said, it very rarely tests this 26 EMA, and there are many companies within this financial segment that are fantastic buying opportunities right now. Bank of America down into their 26 and super solid support. You got Visa, you got MasterCard into their own 26 EMAs, even a little bit lower. You got American Express down here too. So many companies, legacy financials companies at extremely attractive prices to be adding. Moving on to healthcare right now. XLV also coming down a little bit today. Daily downtrend still underway. Rejection from resistance. Couldn't get above it. We've been talking about this for the past 3-4 days of trade. 153 down to 151. And it looks like the prophecy will be fulfilled. We've been waiting for this monthly back test and fill back here of the range, which is 148 down to about 145. Between the 12 and 26 EMA pocket. That being said, every time we come down into here in the context of overall bull markets, it could be a very attractive location to play. And I'll be watching for it here the next days and the next week of trade. Eli Lilly is displaying similar characteristics to where we've been waiting for this backtest. It's coming down hard into the level. Very violent price action today, coming into its own 200 EMA, but not yet daily oversold. A little bit more with a little bit oversold conditions, guys. Very nice opportunity if you've been interested in looking to acquire some shares of Eli Lilly, especially after this massive rally right there. The last time we talked about it was either here onto their 200 weekly, or when we talked about this breakout retest and possibly run pattern right there. Well, now we're getting the larger pattern completion, which is looking very nice. Moving on to SMH right now, semiconductors a little bit flat today, although they were up 0.75%. A little bit trendless on semis right now. Daily downtrend, nice bounce, and they're looking for the recapture of the uptrend, but you're not going to get it done unless you get some of the market leaders to kind of come around, some of the biggest names. You need some pops on Broadcom. You need some pops on NVIDIA as well, right? There's been a lot of pockets of semiconductors that have been doing well, but by large and by far, the index just not moving higher, right? So in the event that we break down with Jerome Powell tomorrow and or some volatility, 377 down to about 368. It's not the biggest range of support, but it's the closest area of price action that we have. That is also synonymous with the weekly 26 EMA. And in the event you go for the weekly downtrend, something that hasn't happened on this ETF for a very long time, guys, since last year around the same period of time with Liberation Day, then you will likely get your retest here of the 26 EMA. That's been very elusive so far. It's been a beautiful year in semiconductors overall, a lot of rotation between various segments, whether they were the semiconductor equipment manufacturers like LRCX, ASML, having a very good time so far. You also got the memory names, obviously, that have been performing extremely well. But some of your market leaders, right? Broadcom has been kind of locked in this area since the month of December. NVIDIA has been locked in this area for like the last 9 months. So you're missing a few key players here to really get that extra degree of lift on semiconductors, but this is your lead bull. So we got to closely pay attention to the price action evolution over the next few days, a few weeks. On to the Russell right now. I guess I can delete this attempt at the rising at the bull flag right now, excuse me. And now we're just going to focus on where we are right now. So daily downtrend overall, still, right? The bull's holding the bottom end right here, 246, 245, all in the dot. In the event tomorrow proves to be a red day after 2 days worth of bounce, if the bears are just too strong, weekly 200 EMA. And that's a common theme across many different things, right? Financials are below their 200-day EMA. Healthcare is coming into their 200-day EMA. The SPY is close to it. The QQs are close to it, right? And that hasn't been the case for a very long time. Look at the Qs, right? For a very long time, we were nowhere close to this. On the SPY, very long time, we were nowhere close to this. And for a while there as well, financials were clearly above it, now net below, and also healthcare, right? Since October, we were very far away from it, now pulling down into it. Semiconductors way, way, way far away, but still, right? Many things coming into their 200-day moving average. So pay attention to that. The bears are still in short-term control, still in a weekly downtrend, and still in monthly consolidation. I would love to see a little bit of a tap here of the 12 EMA on the monthly, which is about 241. Growth stocks still very well positioned for the medium and long term, but it's just in the short term when you have all this headline volatility, also a very tough place to be. That's everything for your overall market rundown. Talking about the VIX. The VIX coming down a little bit more, but tomorrow is a volatility catalyst for the markets when Jerome Powell is speaking and answering questions from reporters. So that being said, if you do pull up into here, you guys know exactly what to do. We're going to be selling options on a big red day tomorrow for some which reason and a big spike in the VIX. Just pay attention, especially a lot of the names on the top 5 options list that I gave on Sunday. I'm waiting for them into tomorrow to see if we can get an increase in the VIX, a decrease in prices, and be able to use some of that buying power, because I've been trading very light this week. I've taken a few little trades here and there, but not that much, as the VIX does remain in a relatively high environment. Moving on further here, we're going to talk about our gold, silver, and maybe a little bit of oil. So gold, still daily downtrend and still weekly consolidation, right? You got to pay close attention how they react to this 12 weekly EMA. If you close a weekly candle below this one right here, call it 48.50, guys, you have done something you haven't done in a very long time. Notice no candle closes here below this weekly 12 EMA, at least not since 2024, the end of the year in 2024. That would be substantially different, right? And as a result, you may be expecting further follow through. So if we are trading here, we should be trading with stop losses right around that level, because that would definitely be a price action regime change for gold, which has been somewhat weak here since the conflict broke out. Moving on to silver, same concept. Silver, daily downtrend right now. As a result, a bit of weekly consolidation. Higher lows on silver right now. Well, you got a couple pockets here, right? The big support zone is 74, then about $70. And kind of the same thing. Silver is already closing a weekly candle below this 12 EMA. Well, they're not closing it, but they're already moving below it. If you close below this, guys, this will be the first time that they've done that. Also, it's this time since about May of 2025. So some different price action regime changes. And when you see those regime changes in the price action that haven't happened for a very long time, sometimes it is synonymous with a larger phase and longer phase of consolidation, possibly into the higher time frame locations, which would be the 12-monthly EMA, probably curling up here into the low 70s. So please keep that in mind. Moving on to oil right now. So we'll see exactly what happens with oil over the rest of the week. Obviously, it's driven by a lot of headlines right now, but overhead resistance on good old WTI is 110 down to about 96. The bulls still in control of this chart right now. Higher lows, cleanly established higher lows. Get some drawdowns, maybe back here the 89. If you really want to be able to say, quote unquote, that the price action is weakening substantially, well, you're going to have to give me a daily downtrend. Only then will you know, all right, we're kind of tapering off here in terms of the prices of energy. It doesn't mean that you can't just do a higher low and then go for it again, right? But as of right now, the bulls are still very much in control of this chart, looking for follow through beyond that $100 psychological range. As a matter of fact, right, since the start of the week, the price of the barrel has been quite tame, but also the news headlines too have been quite tame. So that is what's moving the price of the barrel right now. A lot of the headlines. So we'll just have to keep monitoring what happens with the Strait of Hormuz. Moving on to our Bitcoin and crypto analysis right now. So Bitcoin and crypto, I mean, not doing too bad, although today is a little bit of a red day right here, right? Still, the bulls retain short-term control right now. If you do get a pullback, you are looking for a higher low. Pay attention how they react to these moving averages, higher low, anything above 65,600, right? So any higher low attempt could be a decent entry for further swing trade longs. Stop would have to go below there though, because last thing you want, guys, is to once again be unwound by a little bear flag, because as of right now on the weekly time frame, the bounce is just not that large. Let's be honest, it's a 38.2% bounce. If the bulls can continue a bit more to 50 or 61%, then we can say, all right, we have a great chance of changing the longer dated timeframes. And as a result, we can put a little bit more size behind some of these swing trades. As of right now, most of all these swing trades are counter to the broad and longer duration trends, right? Whether it's weekly, whether it's monthly right now. So just be careful if you're swing trading crypto. Ethereum, same concept, moving through resistance right now, 25, then about 21. Nice daily uptrend by the bulls so far. Any pullbacks, once again, probably into these highs, let's call it about 21, 2150, could be a nice re-entry opportunity for some swing trade longs, carrying them into the higher end of the resistance band if that's where the crypto bulls want to go. But keep your stop losses in check, guys, because the last thing that you want, well, like I said, right, is that this is just a weekly bear flag or just a weekly lower high, as we say, off of a small and weak bounce. And then, since it's only a 38.2% bounce, the bears are favored for at least a retest of the lows or possibly final completion into support. So swing trades on crypto, I wouldn't be able to say you can put a tremendous amount of size behind them. And quite simply, of course, that's because of the environment that we're in with all the war headlines and other things of that nature. That's a broad market rundown, a little bit more quickly than we usually do. Now let's move into big tech names, and let's start it off with good old Apple. All right, so good old Apple, guys, still in the context of this daily downtrend into the 200-day EMA. Not much in the words of broad, or rather very big velocity here in Apple, but overall, we're still in a daily downtrend, still in a weekly downtrend as well, and in the larger phase of monthly consolidation. Now, Apple is very interesting here for a few key different trade ideas. Number one, you find some big red days. If you get some follow through in tomorrow, another leg to the downside, pay attention, guys. Short puts under 240, like in this little 230 pocket right there. Very interesting, 26 EMA. And between this pocket is where I do start to add a little bit, tiny little bit of Apple shares to the long-term portfolio. I've been holding off for a very long time on Apple right now, but every time over history that I've had these shares for a very long time now, like 7-8 years at this point in time, right? Whenever we pull back into this 1226 pocket, I add a little bit. It just becomes part of my DCA rotation. If I put money into the markets every 2 weeks or every month, so to speak, right? That is when Apple starts getting a little bit of money. So Pay attention to that. Moving on to AMD right now. AMD still no price action whatsoever, right? No trends, no controls by the bulls or the bears, just a very choppy range. So below support remains put at 190 down to about 179. You're going to need a really big push here. If you want the bulls to be back in control, you need to break and close above 209. Daily uptrend in motion. Then we would once again be attacking that resistance range. A few key trade ideas for AMD right now. Number one, if you do get some volatility and a big red day, 3-4% to the downside tomorrow, something like that, pay attention to some short puts for possibly next week into the entire 170, 165 range. That'll be the full OpenAI gap fill. And you guys know with the high VIX and a big violent red day like that, you get some phenomenal strike prices. I show it every Sunday, well, at least for the past 2 weeks with the high VIX, right? So that is one thing that I'm doing with AMD right now. But also, if we're looking to currently build some further shares, still a nice region. Once again, between the 12 and 26 pocket, about that 190 down to about 170 range. Phenomenal valuation, guys. I don't think anybody's nervous about the valuation right now. Under a 1 peg at about a 6.64 price to sales for all of this growth, 35% revenue growth, 35% EPS growth on average per year for the next like 4 years, which is absolutely nuts, right? And I'll remind you, AMD is currently like 1.5 generations behind AMD. So this is kind of like buying NVIDIA back in, let's just say very early 2024, or late 2023, right? Before they had their massive EPS expansion, before they had their massive revenue expansion. So if you're losing patience on AMD, don't, because we're literally about to get into the big growth phase. Moving into Amazon right now. Amazon, with all those news headlines I showed you guys at the beginning of the video, right? Having a very nice sequence of back-to-back very nice green days. So if you want to reverse this little bit of a daily downtrend here, you got to give me a little bit more, close above 217. Bulls are back in control, and we look to expand into a further leg higher. The weekly time frame also not looking too bad. The bulls are trying to claw back some of the areas that we've lost after the earnings sequence right there. And overall, on the monthly time frame, guys, still in a monthly downtrend. So we know that these trends take a long time to reverse. First, you got to get the daily back, and they've been doing a good job at that. Then you got to get the weekly time frame back. They've been trying, and thereafter, you got to take a very long time to get this monthly sequence back. So on Amazon, what am I doing? Well, whenever we get red moves towards the lows like we had last Friday, phenomenal opportunity to be selling some short puts under 200. 195 pocket, I'm a big fan. Valuation down there is super compelling, and you got a very solid area of support. So short puts under the market, I'm a big fan. Also adding some shares here, and also leap call contracts. Those are the only things that I'm doing on Amazon right now. No short-term swing trades for me. I'll show you guys what type of companies I'm taking for some shorter-term swing trades at the end of the video. Moving on to Google right now. Google up 1.64%. Google bulls are trying, man. Let's see if they can actually get it done. 311. Close above 311. You got the daily uptrend back. And that would be significant because we haven't had it since early February. It's been sheer bear control right now. You do a couple things. Take out the highs and get back the EMAs. And Google's not going to be looking too bad. You get this break and close above, very easy for us to place a stop loss, either an aggressive stop loss below this guy right here, your high or low, or down there if you're going for weekly expansion and weekly recapture of this trend, because now it's been a downtrend, right? No real support at the $300 range, although the bulls have been defending it on a psychological basis. So something interesting to look forward to on Google. Around $300, guys, the stock is, it's not cheap, but it's not expensive. It's not one of the best deals in the market, but it's fair, let's just say, right? 26 forward price to earnings and a 1.75 peg. So I'm not really adding any shares of Google in the event that the overall markets break down for a big leg to the downside. Where I would be interested in Google is down here around the 270 location with the 12 EMA. But until that time comes, I'm not looking to really add to the positions. I'd rather take advantage of other companies that have better discounts right now, but I am not selling any of my long-term shares. Moving on to Meta. Meta, unfortunately, reacting from resistance right now, down 0.76%. So 645 down to about 630 is that infamous resistance range. It's not a very big one, let's be honest, in terms of the price action, right? It's not a very big one, but it has been kind of a stick in the bulls' wheels right now. So that being said, moving a little bit lower, if we get full pattern completion, you are coming back down to the lower 600s. Phenomenal long-term buying opportunity for Meta. So although there are no short-term swing trade opportunities here, in my opinion, the price action is just a little bit too messy. The weekly bears still in control, the daily bears still in control, and the monthly is still in this monthly consolidation phase right now. phenomenal longer term buying opportunity. So leap call debit spreads or longer term shares, right? Something that gives you a lot of time to let Meta recover because you're betting on the valuation re-expansion. Right now at 620, it's a 21 forward price to earnings and a 1.10 peg. Very cheap for this company indeed, but no short-term swing trades. Price action is just not conducive to that, or for that rather. But longer duration, I'm very much a big fan of that. Moving on to Microsoft, kind of the same thing on Microsoft, right? There's nothing here much to do in terms of short-term swing trades. The daily is a bit messy right now. The bulls are trying to go for it. Higher lows are right down here, 390, but we've been very, very, very weak here. Nothing getting done in the past 1 month of price action. And we're just kind of trying to base out right here. It's a very big level of support, and the bulls have been defending it quite well. Still very close to the 200 weekly moving average. You can count on one hand how many times Microsoft has hit this one in the past like 15 years, right? So we know it's a great buying opportunity, but for longer term trades, taking advantage of your longer version oversold conditions and your longer standing moving average. So leap call contracts and adding shares to the long-term portfolio, I'm a big fan, but until we actually maybe get a more of a push, right? Give me a break and close above 411, a strong push from here. Then maybe we can swing trade with some stop losses down below there and targeting maybe some of this gap fill from after earnings, right? Then it would be worth it. But as of right now, it's looking very weak. So I need to see a little bit more strength from the bulls. Valuation is quite compelling down here, though. I think everybody knows that at 410, 25 forward price to earnings and a 1.34 peg. Moving on to Netflix right now. Netflix not doing much either. So beautiful move off the lows after the cancellation of the Warner Brothers deal. Higher lows are still 75.21, trying to establish some form of a daily higher low. I would be interested in playing Netflix if we make our way down into the low 90s again. I'll probably be selling some put options down below the gap fill territory, which is like high 80s, call it like 87, 86. But as of right now, not much action from me. We do know the bulls had a phenomenal bounce here on the weekly time frame, so they're trying to do a few things at once, right? They got the daily time frame back. Now you got a very nice bounce. On the fibs, this is a very attractive bounce indeed from your most recent lower high. Let me just try to zoom in a little bit so you guys understand where we're taking that from, right? So very nice bounce from your recent weekly lower highs, over 70% right now. That's very solid. So what we're looking for is a casual higher low on the weekly and give me a weekly uptrend. Then we will know, all right, Netflix's monthly bottom is probably in, and then we might be embarking into the longer form regime of price action expansion. As it currently stands, I am still with any DCAs of new money that come into the portfolio. As long as Netflix is trading under $100, preferably closer to like 90 through 70. This is the pocket that I have been adding fairly aggressively over the past few months as we've been down here. Around 90 or lower, that's when the valuation is quite compelling to me. It's about a 1.43 peg, very decent, and we obviously know nothing is wrong with the business model. Moving into good old NVIDIA. So NVIDIA, with all of that news, with their GTC conference, the increase in the guidance in terms of your revenue, right? Which is a 20% increase in guidance. Like essentially, right? There was some confusion before Jensen specified. Now, Jensen specified today that it's literally only for Blackwell and Rubin, which is insane, right? So it's going to be over $1 trillion, but it's $1 trillion through the end of 2027 calendar year, obviously, right? So that being said, if we just take a look here, 2026 revenues are 364. Okay, so 364. And 2027 revenues are about 472, right? So that's a combined $836 billion. Now, $1 trillion, right? Minimum, so Jensen says, right, is about a 20% increase versus previous guidance. And that's big, guys. That's really big, right? So keep that in mind. So moving on further here to NVIDIA's price action, not doing too much. We're kind of just locked in this 185, 180 range. So the favorite thing for me to do right now on NVIDIA, on red days like this, I'm selling put options under the market below the 200-day EMA, preferably closer to the 170 to 160 pocket. Accumulation sideways, not much to report right here. Still no signs of breakout. Daily consolidation, weekly consolidation, and monthly consolidation too, coming right in to the 12-monthly EMA around 175 without my increase in guidance, which will translate into further EPS growth rates, right? I'm still being somewhat conservative, I think, on these NVIDIA estimates right now. 20 forward price to earnings at about a 0.92 peg. So suffice to say, the stock is cheap. I mean, it's cheaper today than it was 2 years ago before we got the guidance, right? 2 days ago before we got the guidance, right? So keep that in mind. Still a big fan of adding, I will be adding a couple more leap call contracts. I think fair value for NVIDIA right now should probably be sitting more towards 240, 250. I'm not calling for a rapid 2x in the share price, nowhere close. But from here, for another expansion leg into 250, 260 over the next, 12 to 18 months, let's call it, even though it may not take that long, that is the type of move I'm going for, and for long-term shares as well. Moving into good old Tesla. So Tesla not really resolving anything with the price action today either, hugging the 200-day moving average, and also no clear trend. For that, you need a break and close above 416 and challenge this 420 to 430 resistance range. You need the daily uptrend. So far, the bears have been in full control. Weekly, still full bear control as well, right? Weekly downtrend, and as a result, monthly consolidation at a 12. If you are trying to claim this is the bottom and going for a swing trade long, please put a stop loss below these lows, because the last thing you want is to be unwound as part of a larger phase of monthly consolidation down here into the 360 to 340 range. So please keep that in mind on Tesla. No swing trades for me right now. Moving on to Palantir. Palantir, not too bad of a day. 1.55% to the upside right now. The bulls are trying to set some higher lows, right? Trying to persist and go for the continuation of the daily uptrend. So far, so good. Support below 150 down about 140. If Palantir somehow makes its way back into here with a couple big red days, you might also find me selling some put options down here. 130 to 120. We did the valuation after earnings when they reported them in February, and we derived that at 135, it's actually not that bad anymore. I mean, if you're looking at the price to earnings ratio, yeah, but you're forgetting they're growing EPS at 50% per year, right? At a 2 peg down to the 130s, it's not bad. So that's an area that I would be looking for short-term sell put options. So short put options, right? And quite frankly, also, I would be maybe interested in, if we do drop down below there and you can get some price action reversals, maybe then I can establish a bit more support and go for a swing trade from this area all the way up to about the 170 range. So far, I'm just staying a little bit patient on Palantir. Solid moves though. Moving on to SOFI right now. SOFI, we got to talk about it. So SOFI, midway through the day, got a short report by Muddy Waters. Yes, the same company that's been keeping a company like dLocal down for an extended period of time, right? And Muddy Waters, although they do have some good research sometimes, a lot of times some of the reports are based in hyperbole. As a matter of fact, I actually ran this one through AI. So they claim that SOFI has been doing some dubious accounting practices and loan practices as well. And as a result, the stock at one point was down today about 5%. Now, the fun thing about AI is you can ask it to cross-check all of Muddy Waters' research and cross-reference with a lot of the reported financial statements to the SEC. So essentially what I had Grok do a deep dive on here is in terms of the charge-offs, which are part of the allegations, the discount rates as well, the loan sales and loan platforms, which are criticized, and the various other forms of incentives, which are also a criticism. Muddy Waters saying that they're basically using SOFI's stock as an off-ramp just to issue, obviously more bonuses for price targets, but also for dilution. And the conclusion that AI came to after going through a lot of different things, guys, right? Going through not only the Muddy Waters research here, but also SOFI's SEC filings, was that, well, their core observations from the short seller here pulled directly from public and disclosed SOFI practices. So SOFI is actually disclosing what they're doing in terms of accounting and whatnot. Nothing is actually being camouflaged or hidden. The misstatement and extreme adjustments are interpretive opinions. Aggressive but legal accounting, which is common in fintech lending. No smoking gun fraud evidence, unlike Sino Forest, Enron, and GE analogies, are rhetorical and hyperbolic. So far, no formal response from the CEO, but Anthony Noto is very active on social media, and we probably are expecting a response from him either tonight or tomorrow throughout the day. So at the time that I'm filming this video, at least, I didn't see any. Maybe there has been one since I've been starting the video, right? Because the SOFI stock is up about 0.7% in the after hours right now, but being able to kind of recapture a lot of that bounce. Now, we did come down perfectly into our support range, 17 and a 14, which is the buy zone for me, right? It's a very big area of price action right now, guys. 2022, 2021 lows, 2024 highs, and they're coming down into it again. I'll remind you down here at about the $16 range. Valuation is cheap. We're now under a 34 price earnings. I'll redo it for you guys at 17 tomorrow, under a 1 peg, and very close to being under a 5 price to sales metric as well. Although SOFI does have a higher price to book than other legacy banks, they're also growing a whole lot faster. So SOFI stock has come down tremendously and has fallen deeply out of favor, but the same can be said about many other fintech players, right? I mean, financials just not been too popular recently. PayPal's been down. The other one that I just referenced, dLocal has been down, Pagaya has been down, Visa, MasterCard have been down, the banks have been down. So fintech, I mean, even Nubank, right, has been significantly down despite posting very strong earnings. Fintech has just been wildly out of favor here for the past few months. Private credit risks have been front and center for the financials landscape too, but also just people, you know, fintech is just not as popular. I mean, last year was a great year for SOFI, but not for all fintechs, right? I mean, you can even see Robinhood has been coming down substantially here. So a few of them performed very well last year, but that all stopped in October and they never really have recovered since. Now, we are very close to weekly oversold conditions. So the way that I'm playing this, selling put options below the market. And if I get a sign, covered calls are very juicy, but also rebuilding a bit of my SOFI position. I was in at $11 during Liberation Day last year. I sold like 25% of my position, high 20s, like $28. So I almost made the position free, almost fully free with that 25% sale. And I'll be looking to kind of add back slowly into the position as we curl into this landscape right now. So keep that in mind. Moving on to Uber right now. Uber, 4% pop. I mean, they were up almost as much as 6 today, but off of the NVIDIA news events yesterday that we recapped on the channel, right? Just more partnerships with NVIDIA Drive ecosystem partners. I mean, NVIDIA has had a partnership with Uber since last year. So I'm not too sure why the street responded so well yesterday, but we did get a couple price target increases on Uber over the course of the day. Once again, showing that the same thesis that I've held for a very long time, that Uber is not going to be disrupted by autonomous vehicles, at least not for a very long time. If anything, they'll be working with very good synergies between each others, right? Because the autonomous vehicles, they have the cars, but they don't have the network, the ride-sharing networks, unlike maybe Tesla would have, right? But many other car manufacturers like Toyota, Mercedes, et cetera, they don't have the networks. So they will be partnering with Uber. Google's Waymo is also partnering with Uber. So nice little pop right here. Nice little price action moving in favor to the bulls right now. And I still do believe that Uber in this mid-70s location is a really good add to the long-term portfolios, right? We always talk about it at $75. It's decent, 22 forward multiple and a 1.11 peg. So very strong revenue growth metrics and monthly active user growth metrics from Uber. I mean, Uber's firing on all cylinders. It'd be one thing if their business was like slowing down, but it's really not. So I want to take advantage of these monthly consolidation phases to add a little bit to the position into this very nice previous resistance, which is current support location. And last but not least, good old Taiwan Semiconductor. So TSM up 1.69%. Pay attention to it, guys, above 356 to get the daily uptrend back, because we know the daily bears have been in full control, right? And now you want to get the higher highs in motion, right? If that's not the case and the market just flushes tomorrow, well, you might just be looking for more weekly consolidation, bring you down into the weekly 26. I'll leave the circle there so you'll see what it is going to be as well. Move down to there, support area, right? Lower 315, 300 range, and the 12-month EMA will be curling up. This is my key area. I want to put like a million stars right here. If TSM comes down there, I will definitely be participating. As of right now, nothing much from me. Not a big enough pullback for me to be playing this one. I mean, you can play it on a short duration swing trade basis if you want to. Stop loss goes below the most recent weekly low. You're just playing the continuous expansion here of the weekly uptrend, riding the weekly 12 EMA, a bit like gold has been, to be quite frank with you, right? So make sure you manage your stop losses if you are going for a re-expansion to the highs, at least from these levels. That's the only short-term swing trade that I can see on TSM. And once again, that would be you just calling this the temporary bottom and going for the re-expansion here of the swing trade capacity without waiting for confirmation. Usually you'd want to wait for confirmation to get above here. At least you could put a tighter stop than down there. If you're going without confirmation on the higher time frames, well, you just got to put stop loss down there and you just got to say, well, I'll try to make, we'll try and trust this weekly 12 EMA and trust semiconductors as your lead market bulls, and also trust TSM's phenomenal fundamentals, which are quite attractive. Although at 340, I'm not adding anything. It's not that it's expensive. It's just that I think there are currently better deals in the market. It's not that bad at all. On TSM, though, I am quite full, having held the stock for a very long time at this moment. So that's everything for your overall market rundown. Hopefully you guys enjoyed that. Now, it's been about 10 minutes. I'll try to keep the video under an hour. We'll send 10 minutes. And whenever I say 10, it's always like, it always turns into like an hour. Not really. It always turns in like 20, 25 minutes. But I promise you, 10 minutes or less right now. Biggest gainers and losers. Let's go. All right. So top list right here, we'll talk about Credo. So Credo and A-Lab, the copper trades essentially, right, as part of the data center connectivity trade. Jensen talked about it yesterday. We need more of them in terms of copper, and we also need more photonics. But you know what's funny? Both copper and photonics were unfortunately down for the day. So Credo coming down into their lows, $100. If you were looking to pick up Credo, I mean, growth is definitely not a problem for this company. We did the valuation at 135. It was Fair. At 100, it's even better, right? Pullback to the 26 EMA, substantial pullback from the all-time highs. Demand is definitely not a question for them, so copper still will be definitely very popular here and very much in demand for the next few years. Beautiful EPS expansion, beautiful revenue expansion, but just broad market consolidation as the market has kind of favored the other side of this trade. Rather than being in Credo and A-Lab, no, people are now all clamoring into the AAOIs of the world, the Lumentum Holdings of the world, and names like Coherent and Fabrinet, et cetera, right? So AAOI pulling back in a big way. They did a dilution offering just a few days ago, and they've pulled back substantially from the highs, right? So what goes up must come down eventually. Very tough to be entering a trade right now, guys. The price action definitely doesn't support any entries. Very choppy price action and not really pulling back in any major EMAs. So I'd be patiently holding off. It's true that if you believe that AAOI's guidance for end of 2027 to be true, well, then the company is trading for still a relatively cheap valuation. It's just that I do believe that some charts just look better right now, right? Like Lumentum Holdings, this chart looks a lot better. Easy locations to be able to put some stop losses down there off of some weekly consolidations, not quite touching the 12 EMA, but a substantial discount, substantial pullback nevertheless. And names like Coherent, right? Very solid too, just riding this 12-month EMA. We can easily set some stop losses below possibly some of the lows of today, or if you wanted to go for the full weekly higher lows, right? Not too bad. And Fabrinet as well, right? The charts look great for uptrend continuation, right? But we know these trades have been running excessively hot over the past few months. So please keep that in mind, if you're trying to trade some of those. Arguably the ones with the most favorable charts, Lumentum Holdings, your industry leader right now. Special shout out to Coherent, Fabrinet, and even GLW, right? GLW is looking pretty good right now. Easy levels that we can kind of trade off of here for some short-term swings with some recent stops. And that is right into your 12-weekly EMA, right? So these 12-weekly EMAs, right? Very strong momentum so far. So just keep those in mind if you're trying to swing trade based off these levels, right? Eli Lilly, we already talked about it. We talked about healthcare. I like Eli Lilly into this entire pullback section for some longer-term shares. Not maybe necessarily for some shorter-term swing trades until the price action clears up. I would like to see a daily uptrend recapture by the bulls and enter any short-term swing trades by then, because at this point, it is currently a daily downtrend and kind of a falling knife status. But if you've been on the sidelines waiting for an entry in terms of Eli Lilly between the 12 and 26, I mean, you guys know the drill, right? Between the 12 and 26s for any long-term buys on these very high-quality compounding companies, not the worst bet in the world. Talking about NBIS, they were up 15 yesterday and down 10 today. Why? Well, of course, they did a little bit of a dilutive event. So benefiting from yesterday's share price increase to release some good news yesterday and then some bad news today. $3.7 billion in terms of a convertible note offering. Still very bullish on NBIS. What this does free up some opportunities for us is that if it does come down here, if we're looking to get in, beautiful support range, right? Beautiful breakout. Looking for the breakout, retest, and possibly run, or any further consolidation is going to open up, again, some beautiful short put opportunities. So selling some put options into the $90 to $80 range, which is my sweet spot for NBIS. Pay attention to that one. And conversely, all the other, neo cloud providers have come down because of NBIS's weakness today. So IREN, not too bad. If I'm selling some put options down here, mid 30s is probably where I want to go. And CoreWeave, if I want to take that trade, I'm probably going to sell some put options under 70 if I wanted to do that. None of them I am trading right now, but NBIS would be my favorite and best bet out of all of them specifically. That's just for me personally. Maybe talking about Intel, one of the last ones here on the biggest losers of the day. Intel, unfortunately, being unwound here. They were looking great for kind of this rounding up and trying to get the daily uptrend going into expansion. Unfortunately, not happening right now. So Intel still in this very choppy price action range. The one thing I will do on Intel, though, is if they do make their ways into the low 40s, I'll probably be trying to target some of these high 30s for some short puts. So selling put options below the market. I would love if they would assign me on Intel down here, obviously government deals and Intel turning around the business very slowly. So I'm just looking to play these broader monthly swings. Come down into here. It's a very, very, very solid area, guys, of price action. All the monthly EMAs are there. So if you get a bit more weakness, I would be open to selling some put options here in the next few weeks into that range down below. Those are pretty much the major themes that I wanted to cover to the downside today. I mean, I guess we could talk about some of these battery names, right? FLNC, I am a big fan, once again, of building a bit of a position. The valuation on the company is very fair right now, and this is a multi-year opportunity for me, right? So I'll be holding this one for a very long time. If you're into the battery names, this one or ENS, which is your market leader, very interesting. ENS has the better price action right now. They're trying to swap over the daily MACD, trying to go for the daily uptrend. This is substantial, right? After being stuck in a downtrend for so long, the bulls are starting to play ball, right? Trying to recapture the EMAs, trying to go for the daily uptrend swing. So easy stop loss level below the lows, right? We're just looking for some further expansion for this great company as well. FLNC, ENS, best market players in terms of battery energy storage. And we know energy is going to be a crucial component of the markets here into the next few years. So these trades are not, or rather these plays are not just for short-term swings, right? They can carry into longer-term portfolio positions just to benefit from the clear energy demand theme, renewables, battery energy storage, right? And uranium as well, and nuclear. So keep that in mind, right? Speaking about, I mean, while we're on topic, right? May as well talk about it. URA or NUKZ, my preference is NUKZ. I just like the holdings distribution a little bit better in NUKZ, right, for the nuclear plays. Now, we can pay, we can talk about them individually. CCJ obviously is going to be your market leader across the whole theme. In terms of CEG, you're a market leader in terms of utilities, but also Vistra. Very interesting here. Vistra is one of my favorite utilities plays. They also have a nuclear component, but they have many more components as well. And Next Era Energy, also one of my favorite energy plays overall, while we're on the topic of energy, but uranium specifically, pay special attention. If you want some smaller cap names for energy fuels, I mean, there's obviously quadruple U's, right? They've been very hot recently, but two of my favorite players, LEU, very, very attractive play, and UEC also. Pay special attention to those guys. If you're looking for some small cap names, just putting you on to them, UEC and LEU are positions that I will be building slowly, and also building a position in NUKZ at the same time. So just a shout out to the entire uranium trade. I think it's going to be very popular over the next 4, 5, 6+ years. So positioning can be done now. Moving on to the biggest gainers of the day now. So first one up, Lemonade. Good old Lemonade up 16% today. Super strong day, big upgrade from Morgan Stanley, and a beautiful daily uptrend here out of the support range. We talked about this one a few times when it was down below there. If you are in this one now, you have a clearly defined stop loss range, which would be below 52, and future target expansions. If you're going for the larger swing trade expansion, you would be retargeting the highs, right? 90 up to the $100 swings. Beautiful monthly pullback, right? Beautiful, beautiful monthly higher lows being set by the price right now, and you're going further. This one, very interesting, guys, even for a multi-year hold. Moving on to Rocket Lab. Rocket Lab up 10% and down 5% because $1 billion equity stock dilution after the close right here, but the price action is very nice. I brought this one up a few times over the past few weeks, waiting for the daily trend breakout. I'm in this one. I am swing trading it long. Clear stop loss defined level down here below the mid 60 range. And essentially what you're looking for is after extended pullbacks, consolidation, and the establishment of a new trend, we are looking for the bulls to put in some work and move their way back to the previous highs, right? So very nice swing trades on Rocket Lab, but also a company I'm extremely bullish on here for the next few years, especially with the SpaceX IPO. This is basically your mini SpaceX, right? Shout out to all the other space trades, and we'll get into them at a future time. But Rocket Lab, ASTS also displaying some similar characteristics of price action, trying to go for their own daily uptrend breakout, but it's a bit more, the Rocket Lab is clear, right? They already have it. ASTS, because they printed this big high the other day, they don't quite have it just yet, but ASTS as well, right? We're looking for swing trade longs, decent, right? Just looking for the weekly upswing back into the highs. Very decent price action right there. The drone companies also looking quite good. Ondas has earnings next week. This one is a very interesting play, arguably one of my favorites in the entire military/drone landscape right now. It is not cheap. That's the only thing about this company, right? Back here at 6 to 7, when we covered it back here, it was cheap. Now at about $10, $11, it is not cheap any longer. So my favorite way of playing this one, possibly selling some put options down here, nibbling a little bit on the position. It is a multi-year hold. KTOS and some of the other drone companies looking very good as well. KTOS getting the daily uptrend breakout. Another trade just like Rocket Lab, right? Very easy to be placing some stop losses below the lows. And we're looking after a lot of consolidation here for a recapture and swing trades back to the highs. The drone company's looking good. Even AVAV getting a little bit of love here off the bottoms. I do own this one specifically and added more to the position in the lower 200s. So AVAV for me, not a swing trade. The other ones have better price action. AVAV is a long-term hold. KTOS is a long-term hold. Ondas as well will be a long-term hold. Rocket Lab too, but some of them are also tradable because of their price action. Kraken, you guys know that I've been in this one since under $4. It's moving higher right now. So Kraken continuously getting more and more price target increases from the street. Although right now they are trading expensive in relation to their forward revenue growth metrics, the amount of partnerships that they're gathering are quite substantial. So it's only $2 billion. It's a $2 billion company. It's not cheap in relation to this year's revenue and earnings or next year's revenue and earnings, but a company that I will hold probably for years and years, as this is probably one of the better plays in terms of robotics, especially for naval applications. OSS, another very popular one right now, right? So OSS, I am in this one as well, building the position around the $8 range. Edge compute is going to be something big to pay attention to. OSS, probably my favorite player right there. Them too, right? In relation to this year's forward revenue and earnings, a little bit pricey. However, the amount of contracts they will be getting with the US military are going to be quite substantial in the next few years. So once again, short puts under the market to build a position, or nibbling into the position if you're looking to hold it for a long term. Only a $260 million company. I will be holding this one as well for a very long time. Micron and SanDisk and the other ones we talked about earlier, breaking out. Micron has earnings tomorrow, so we'll pay attention to it, but the price action is very, very good right now. I am currently long Micron from this area of consolidation. Easy 12 EMA backtest trade right now. And we know that, as I said yesterday, right, these companies are cheap on a forward price to earnings multiple. Some people don't agree with that because they say it's quite cyclical. But then again, if that cyclicality carries you into 2028 to 2030, well, there's probably more meat left on this trade, right? So keep that in mind for Micron and SanDisk or WDC or even the Korean players. EWY is probably going to be my next ad, but I am currently long Micron right now. No SanDisk for me. And I think that's it. I mean, another one that looks very good right now is Bloom Energy after extended consolidation, right? Looking very, very, very solid right now. The weekly is just waiting for it, right? Beautiful accumulation here at the top end of the move. Sideways consolidation. You could say it's a very nice bull flag that's forming right now. Hasn't pulled back that much on the monthly at all, close to the 12, but it's a very easy tradable location. Stops to go below the lows. I am also long Bloom Energy from this area of consolidation. Another one of my favorite plays in relation to the whole energy trade for the next few years coming up. And I think that's pretty much it. I mean, some software names bouncing nicely. I am still long UiPath. I haven't talked about it in a while, but RPAs and whatnot. I don't think that Clawbot and Claude agents are going to disrupt in UiPath's entire business. UiPath probably stands to do quite well, and the valuation down here is indeed still quite compelling. So, I mean, it's not going to rally recovery 2x in like 2 weeks, but down here, I am still a big fan of adding slightly to the position, building the position, and then just kind of letting it ride. AMPX has been a big winner for us. You might remember we talked about on the channel. We built the position in the $10 range after an extended period of consolidation as well. And AMPX batteries for all the drones looking very solid right now. Almost weekly overbought. It's been daily overbought for a while. I'm up almost like 2x, so it's tough for me to tell you guys to chase right now. $2.66 billion company. So we've been making some really good trades with these small caps over the course of this year in the Discord group. However, right, still not positive on EPS. However, the revenue growth is very solid, but just keep in mind, the bulk of that revenue growth comes later on in the timeline. So we are trading rich right now in relation to Ford 2026, Ford 2027, which is why I locked in a great cost basis, and I probably will be holding this one for a long time. Now, I do believe that's all the time that I had for names today. We covered a lot of them yesterday, a lot of them on Thursday. We'll cover more of them on a day-to-day basis. But I think, guys, that's going to be it for today, just covering some of the key themes, some of the smaller cap names here. Obviously, tomorrow I'll include more. We'll talk about some of the larger cap names. You guys know I like Booking.com. Talked about it earlier. You guys know I like Axon down here, 5 to 400. You guys know I like AppLovin down here as well, low 400s. You guys know that I like Reddit down here for a bit of a swing trade long or longer form position because the valuation is quite cheap. So many ideas, many opportunities. We will talk about more of them tomorrow. Yesterday, we did a whole piece on cybersecurity. I like cybersecurity right now. I think it's the best area to be in software. We can either play it with the market leaders, CrowdStrike and Palo Alto Networks, or we can just play the entire CIBR ETF, or we can play just IGV software. And I am long right now the broad ETFs. I'm long broad IGV, not doing individual names. The largest two companies in the IGV software index are Microsoft and Palantir. So please keep that in mind. So that's going to be it for today, guys. Kept it short and sweet, at least shorter than usual, although it is still an hour. I mean, I feel that it's shorter. I think I've covered it in pretty good time today, but we will see each other tomorrow and recap exactly what happened after Jerome Powell spoke. So That's it for me today, guys. If you enjoyed today's video, consider dropping a like and subscribing to the channel. If you want to see more of this content, of course, it really helps me out to grow the channel because these videos are very long, so the algorithm doesn't really push them. But if you guys drop a like and subscribe, it definitely helps them get to more people overall. And last but not least, if you have any comments, feedback, questions, or if you guys are looking into some individual stock, I would love to hear from you. Leave a comment down below and I'll get back to you usually within the next 24 hours. And last but not least, guys, if you are tired of trading and investing in the markets all by yourself, we know the markets are very challenging sometimes, very noisy. So if you wanted to trade and invest as part of a group of dedicated traders and investors such as yourself, you may consider joining our trading and investing community. The link to join us is down below in the video description. In the community, of course, well, number one, you get access to all of my trades in real time. So whether they are the wheel trades or the leap call trades or the small cap trades, the thematic trades, the long-term portfolio trades, any type of things that I do, either in my long-term portfolios or my trading portfolios, you get access to all of it in real time. Additionally, you get access to our private morning live streams every Monday to Friday for about 2 to 3 hours at the open. I go live, we trade the markets live, and also I take all of your questions on your stocks, your options, your long-term portfolios. It's the best place to ask me, hey, Will, what do you think about this stock? What do you think about this trade idea? What do you think about these options on this company, right? Best place to ask me is in our live streams. We have some very good discussions on a daily basis and have a lot of fun in the process as well. So feel free to join us in those live streams. Additionally, obviously, you can ask me all your questions in our chat rooms throughout the day, and I'm very fast to answer. You get access to 15 hours of private video content on my trading strategies, how I do my leap call options, how I do my spreads, how do I build a long-term portfolio, how do I build a trading account, depending on your risk tolerance, how do I do my fundamental analysis, technical analysis. So 15 hours of content that I will never put on YouTube is in there as an added bonus. And of course, you also get access to all my charts. Whenever you guys see support and resistance on some charts, plus fundamental breakdowns, and that is true for like hundreds of companies, you can just copy paste all of my charts, all of my watch lists. It takes like 15 seconds to do, and they become yours. If any of that interests you, we would love to have you with us in the community. As I said, the link to join us is down below in the video description. And if not, I will see you right back here on the channel, guys. That's it for me. Have a great rest of your Tuesday evening. I'll see you tomorrow after the market close. Peace.